Hi and welcome to another edition of Weekly Market Reports by tradersclub.co.uk. This is the report covering week beginning 4th of November. As per usual, let's start with the disclaimer. Anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your trading or investment. We are simply sharing the information for the benefit of the club members. The first chart that we are going to look at today is the chart of S&P 500. It's a daily time frame, and it was an unusual week. Obviously, only 3 trading days because of the unforeseen weather conditions. Markets were closed in US. And we saw a bit of a volatility coming in. Prices were spiking higher, and then obviously we had a non-farm payroll numbers being released on Friday, and the market reacted in a fairly unexpected way. Although the numbers were better than expected when the market opened. The S&P rallied initially only to find resistance here at the confluence of 20 and 50 period moving average on daily time frame, and then subsequently it created this fairly bearish candle setup on a daily time frame, which can almost resemble the tweezers, and it's fairly bearish at the moment. Support on the downside can be found here at 1403 level, which is the cluster of previous lows. Alternatively, at 1396 level, and only the loss of those two supports would potentially target a rising 200 period moving average on a daily time frame. If we see a return of the price action above these levels, the current resistance on the upside should be located here at 1425, followed by 1430, which is also this fairly significant neckline for this triple top formation. Followed by 1434, which is 20 and 50 period moving average. Only the successful breakout higher would potentially target these levels here, which is 1460, 1470 level. But there's quite a bearish setup here at the moment. Stochastics are oversold and they're curling up. So that's something for us to watch as well. A subsequent chart is the chart of DAX 30, which is a German index. And unlike US indices, FTSE and DAX are much more bullish. That they're holding the levels, I suppose. DAX created this a sideways consolidation range, and it's currently, the price action is still trading above 20 and 50 period moving averages, unlike S&P and Nasdaq and Dow. So the price is actually nicely supported by this rising trend line, which is a dotted line, and obviously additional rising support line here. And the current resistance on the upside can be found here at 7,400, followed by 7,447 and 7,478. Alternatively, if we see a price softening as a result of what happened on Friday, and price starts pulling back, then the obvious support on the downside is located at 7283, which is 20 period moving average, followed by 72, which would be a nice round number, and this rising support trend line. And only a significant loss of that could potentially target 7120, which is significant low, but this looks more bullish than S&P and, as I said, US indices. This is a chart of VIX volatility index, and obviously we saw a nice little trigger here, a subsequent pop out and then return inside upper Bollinger Band, which was short weeks ago long S&P, and that played out nicely. So we saw quite a bit of a spike and a rallying at the initial stages of market opening on Wednesday, then subsequently pulling back, and the same thing on Thursday. So the trigger actually worked, and at the moment we can read this as a breakout and then subsequent retest of this previous resistance, now newly formed support, and VIX is actually spiking higher, which is negative for the market as well. So something to watch. Immediate resistances on the upside are located at 1896 level, which is also a fib retracement level, followed by 1965 and 21, which is the 50% retracement. Alternatively, support on the downside are clearly located here, where the moving averages are 1643 followed by 1596. Just something for us to keep an eye on. This is the price action of gold in the daily time frame, and a Friday trading session witnessed this hugely bearish pullback. The price action is currently retesting this rising support trend line and also lower Bollinger Band. This is the longer term picture for gold is still in the uptrend, although this pullback looks quite bearish. So the levels for us to watch here, which is 1665.76, which happens to be significantly important 200 period moving average on a daily time frame, and also 1661.89, which is the 50% retracement from summer's low to a recent highs. The loss of those two levels would potentially call for the retest of 1629.74, which is the full fib retracement extension of 61.8%. Alternatively, if these levels of support are respected and confirmed, the resistance on the upside is located at 1707-1705 level, which is the cluster of this previous lows, followed by 1731 before we attempt to go higher. Stochastics is in oversold position and curling up as well. This is the price action for WTIC, or American Traded Oil. And yet again, it's a fairly similar picture to gold. The market reaction to non-farm payroll numbers was a bit strange, because suddenly, yes, the better than expected job creations and dollar actually started rallying, because the sentiment was the better situation in a job front could mean a less requirement for additional QE3. So market reacted in a funny way. So dollar rallied, and most of the commodities and other currencies sold off. So oil was one of them as well, and it created this fairly bearish candle setup of bearish engulfing, and the major support levels are actually lost, which is 85.60 or 80.86. So subsequently, the level that I'm watching with significant interest is 83.65, which is this dotted line here, previous low. If that level is lost and we see further selling, then there is a fairly empty space here between those two support levels. 77.28 was the previous significant low, and the price action can drop down very, very quickly. Alternatively, if the price action firms up around these levels where we are, and additionally respects potentially this level as an additional support level, resistance on the upside, it's located at 86 level, 85.50, 86 level, and then subsequently followed by 87.70 and 88.95, call it 89, which is this 20 period moving average before we go up. Stochastics is oversold. Just something for us to watch. It's the market reaction at the moment. It's quite significant. I think there is no pricing here for a geopolitical risk at the moment as well. this is the price of dollar index, and as I already mentioned, the price action of dollar index was quite bullish. The initial pullback and then big rally. We finally broke through this 80 level, which is psychological level, and the price action is currently retesting resistance of significantly important 200-day SMA, which is this green line here. At 80.59. Resistance above there, it's located at 80.71, which is the fib retracement level from 84 high to 78.60 low. And only a successful breakout higher above those levels would potentially target 81.36, which is a 50% fib retracement. Alternatively, if the price stays where it is and we confirm resistance at 200 period day moving average, support is at 80, which is a psychological level, followed by 79.82. And last chart is the chart of euro dollar. We saw a significant softening in that price as well. This is quite bearish. It looks like a triple top, but we need the confirmation. This level is significantly important as well, 1.28 level, which happens to be the neckline of this triple top. Moving averages are curling up as well, and the significant drop lower below 128 would potentially target this 200-day period moving average at 1274 level, 1275 level, and that would be also 38.2 fib retracement. Alternatively, if these current levels confirm support, the resistance is located at 129 and then 1.3, which would be a psychological round number as well. So just something for us to watch. The return of the price action below this 200 period moving average would be quite bearish for euro dollar in general. Okay, so much covered. Hopefully, some instruments of particular interest for you are covered as well. If you need to know more, drop me a line, and hopefully you enjoy this. Talk to you soon.